Imagine this for a moment. It's a quiet morning. You pour yourself a cup of coffee. You sit down at the kitchen table, the same table where you've paid bills for the last 40 years. You open a letter from the IRS, and your hands start to shake. The letter says you owe money, penalties, interest, and worse. A refund you were counting on, money that was supposed to be yours, has been permanently forfeited to the U.S. Treasury. You read it again and again. You feel your stomach drop because nobody warned you. Nobody told you the rules had changed. And now the home you worked your whole life to pay off is being mentioned in the same letter as the words federal tax lien. If this scenario makes your heart beat a little faster, please don't click away. Because what I'm about to tell you could protect everything you've built. Hello, my dear friend. I am Milena. I'm a senior policy analyst, and for years I've been helping retirees just like you understand the confusing rules that the government writes in tiny print. Today, on Silver Law and Money, I'm going to walk you through exactly what changed at the IRS this year, what every homeowner over 65 must do before June 15th, and the 3 simple steps you can take this week to protect your money, your home, and your peace of mind. And please stay with me until the very end, because there is one hidden mistake, a small, quiet mistake, that I see seniors make over and over again. It can cost you thousands of dollars in lost refunds and trigger penalties on your Social Security checks. I'll reveal exactly what it is in the final part of this video, so pour yourself another cup of coffee. Get comfortable. Let me tell you about Robert. Robert is 67 years old. He lives in a modest 3-bedroom home in Ohio that he and his late wife bought back in 1984. He retired 3 years ago from a job at the local utility company. He gets a small pension. He gets Social Security. And he thought, like so many of you watching right now, that his tax days were behind him. Robert was careful. He paid his property taxes on time. He kept his mortgage statements in a folder. He even filed his 2023 and 2024 tax returns using the Easy Form 1040SR, the large print version designed for seniors. But Robert made one small mistake. Just one. He never filed his 2022 tax return. You see, in 2022, Robert's income was low. His pension hadn't started yet. He thought, I don't owe anything, so why bother filing? That's a very reasonable thought. And it's exactly what the IRS is counting on you to think. What Robert didn't know was that in 2022, he was eligible for the credit for the elderly or disabled, a credit that could have put money back in his pocket. He also had federal tax withheld from a small part-time job he worked that spring. That withholding? That was his money. The government was simply holding it for him. But here's the rule, and please listen carefully. The IRS gives you exactly 3 years to claim a refund. 3 years. Not 4. Not 5. 3. This is written in the tax code under section 6511. And for the 2022 tax year, that 3-year window closed on April 15, 2026. When Robert finally went to his tax preparer in late April, he was told the truth. His refund, almost $2,000, was gone. Forfeited. Permanently. There is no appeal. There is no hardship waiver. There is no I didn't know exception. The money now belongs to the U.S. Treasury. Robert sat in that office and cried, because $2,000 for a retired senior on a fixed income is not just money. It's groceries for months. It's a new water heater. It's the difference between paying the electric bill and choosing between heat and medicine. Now, I'm telling you Robert's story because I don't want it to be your story. So let me explain in plain, simple English what the IRS actually requires of senior homeowners right now and what just changed this year. There are 4 rules you need to understand. The first rule is the 3-year refund window. If you didn't file a tax return for 2023 or 2024 and you had any federal tax withheld from any source, a part-time job, a pension, a 1099, that money is sitting in a treasury account with your name on it, but only for a limited time. 3 years from the original due date. Once that window closes, the money is gone forever. The second rule is about estimated taxes, and this is where June 15th matters. Many of you receive Social Security, a pension, or money from an IRA, and many of you assume taxes are being taken out automatically. They are not. Social Security does not withhold federal taxes, unless you specifically ask them to by filing a form called the W-4V, and up to 85% of your Social Security benefits can be taxable. If you owe more than $1,000 in taxes at the end of the year and you didn't make quarterly estimated payments, the IRS charges you an underpayment penalty under Section 6654. For 2026, that penalty rate is 7%. The second quarter estimated payment for 2026 is due June 15th. That's the real official IRS deadline you cannot afford to miss. The third rule is good news, and it is brand new. The One Big Beautiful Bill Act, signed into law on July 4th, 2025, created a new deduction just for seniors. If you are 65 or older, you may claim an additional $6,000 deduction on your federal return for tax years 2025 through 2028. If you are married and both spouses are 65, that's $12,000. And here's the wonderful part. You get this whether you take the standard deduction or you itemize, but it phases out if your modified adjusted gross income is above $75,000 for single filers or $150,000 for joint filers. If you don't file a return, you don't get this deduction. Period. The fourth rule is also new, and it directly helps homeowners. The SALT cap, that's the state and local tax deduction, was raised from $10,000 to $40,000 starting in the tax year 2025. This is huge for senior homeowners who itemize, because now you can deduct much more of your property taxes alongside your state income or sales taxes, but you have to itemize correctly. Special assessments for sidewalks, sewers, or homeowner association fees are not deductible. Only real estate taxes based on the assessed value of your home qualify. Now here's where it gets dangerous. If you ignore these rules, the consequences are real, and they are harsh. The failure to file penalty is 5% of the unpaid tax per month, up to 25%. The failure to pay penalty is another 0.5% per month. Interest compounds daily. And in the most serious cases, the IRS can place a notice of federal tax lien against your home. Yes, the home you worked your whole life to pay off. They can also levy up to 15% of your Social Security check through the Federal Payment Levy Program. That's the reality. That's why this matters. So let me give you 3 simple steps, 3 actions you can take this week, today even, to protect yourself. Step 1, pull out your tax records for 2023 and 2024. If you did not file a return for either of those years and you had any income with tax withheld, call the AARP Foundation Tax-Aide program at 888-227-769. They prepare tax returns for free for anyone over 60. They are IRS certified. They can help you file back returns to recover refunds before that 3-year window slams shut on you. Step 2. If you receive Social Security and you don't have federal taxes withheld, go to ssa.gov today and download Form W4V. You can choose to have 7, 10, 12, or 22% withheld from your monthly check. This one form can eliminate your need for quarterly estimated payments and save you from the underpayment penalty before that June 15th deadline. It's free. It takes 10 minutes, and it protects you for the rest of your retirement. Step 3. Make a folder, a real physical folder. Label it 2025 tax year. Inside, put your property tax bill, your mortgage interest statement, your 1099 from Social Security, any pension 1099s, and any medical receipts. When tax season arrives in January 2027, you'll have everything in one place. And if the IRS ever sends you a letter, you'll have the documents to respond within the 30-day window they give you. Now, before I let you go, I promised I would tell you about the one hidden mistake that catches more seniors than any other. Here it is. Many of you confuse federal IRS rules with state and county property tax rules. They are not the same. The IRS does not give you a senior homestead exemption. The IRS does not give you a property tax freeze. Those programs exist, and they can save you between $500 and $3,000 a year. But they are run by your county assessor's office, and almost every single one of them requires an annual renewal application. Miss the renewal, and you lose the benefit for the whole year. So please, after you finish this video, do one more thing. Call your county assessor's office. Ask them, am I receiving every senior property tax benefit I'm eligible for? When does my renewal need to be filed? Write down the answer. Put it on your calendar. My friends, please understand. The rules change in 2025. The One Big Beautiful Bill Act gave you new deductions, new protections, and new opportunities to keep more of your money. But none of that helps you if you don't file a return, don't withhold from Social Security, and don't make that June 15th estimated payment. The deadlines are real, the penalties are real, and the refunds you're owed will not wait for you. Please do not rely only on YouTube notifications for important updates about your benefits. YouTube's algorithm doesn't know if you missed a payment. It doesn't know if your refund window is closing. You need to go directly to the official sources: IRS Gov, SSA Gov, Medicare.gov, AARP.org. Bookmark them. Check them once a month. And if this video helped you, if you learned even one thing that protects your money or your home, please share it with another senior in your life, a neighbor, a sibling, a friend from church. Because the truth is, the people most at risk of losing their refunds and their benefits are the ones who never hear messages like this one. I am Milena. Thank you for trusting me with your time today. Take care of yourselves. Take care of your paperwork, and I will see you in the next video right here on Silver Law and Money.